For our 20th episode of How to ThinkScript, we're going to be building an unusual volume scanner. Specifically, we're going to be building 4 different scans, all of which are designed to help us find high probability trade setups that are happening with unusual volume opportunities. Now, the goal of this tutorial is simple. I want to show you how you can let ThinkOrSwim do the heavy lifting for you and go out and find these trade opportunities that are interesting setups where you have both higher probabilities, but also just basic principles of logic with supply and demand supporting the actual trade. Now we'll write all of these scans from scratch using the custom study filters in the TOS scans area, but we'll also be leveraging some of the built-in studies to help us objectively look at volume. Now there's 2 different aspects of this tutorials, or 2 different parts. The first one is free for everyone, which is this particular video in which we're going to be building 4 different scans. I'll go over those in just a minute, but we also have a second part, which is free for all Volatility Box members included with both the futures and stock memberships, where we're going to take this and design 4 additional scans, so on top of the 4, a total of 8, where we'll have some more popular setups introduced here with volume, things like the VWAP, things like the squeeze, along with what I call the hidden gem. So now if we come back to our list of 4 that we're going to build in this particular video, starting off, we're going to be building a scan in which we find stocks and futures where we have more than a 4SD. This is standard deviation volume move. This is to really say, if we just say this in layman's terms, we are in extreme volume territory, which usually is followed by a persistent move in one direction or the other. And this scan is designed to help us find some of those opportunities. Now, after that, the next scan that we're going to be building is where we're looking for consistent and multiple bursts of 3 standard deviation plus volume over a 5-day period. So now what really this is targeted is trying to find these multiple bursts of volume, which is then designed to help you find where money is flowing into either a particular market, whether that's stock or futures. Now in the third scan, we're going to switch gears here, and we're going to start to bring the same scan information, but use the options hacker to try and scan for unusually high volume activity. And the closest way I know how to describe this is similar to what folks call a sweep. This is where we see greater than usual volume in a specific option strike. So this way you can come down, target the actual strike where you may be looking at either purchasing or selling that contract, but using volume as a reason rather to actually focus on that particular strike and use that as information to dictate some of these trades. And finally, we're going to conclude this video with building a scan where we find unusual volume opportunities, setting up near some of our key moving averages. So in this case, we'll be looking at the 50-day and the 200-day simple, but you'll also notice how you can then bring in your own set if you want to change this to the exponential, whatever it is, right? The whole idea here is to give you the tools and go over 4 different scenarios where you feel comfortable enough to start to build your own scans for either your own set of indicators, or even better, take some of these scans and layer on your own set of indicators to try and find specific signals to deduce down this list even more, right? The whole idea of the scan then is to spit out as few ideas, but as few and focused ideas where you know that, hey, there's some interesting trade setting up. Now for our Volatility Box members, we're going to be building the following additional 4 scans where we incorporate things like all of the research and code that we built in the Triple Squeeze course to try and find actual signals as opposed to just a larger list of stocks. So that's what we're going to be building in that first scan, where we focus on trying to find better quality squeeze setups. But then in the rest of the scans, you'll notice we go away from the squeeze, right? So in our second scan for members, we're going to be building an intraday scan where we're trying to find areas where we have high volume near some of these key support areas. So things like the VWAP, right? And so this then alerts you where you have opportunities setting up in which the market's starting to pull back to the VWAP, where you now have either a lot of buying coming in, consistent buying coming in, all giving you this general notion that, hey, support is there where we have our volume weighted average price. After this, the next thing that we're going to be doing is definitely a lot more experimental, but that's where we're going to scan for what I call the hidden gem unusual volume opportunities. And really, this is where we flip volume on its head. So typically, when you have high volume, you see price action supporting that, right? You see plus 10, plus 11% moves. You see the stock is either starting to break out, something of that sort. In the hidden gem opportunities, we're going to flip that, where we're trying to find places where we have a lot of volume and unusual volume rather, but we don't have price action that's supporting it. In fact, price action is very quiet, suggesting that whatever this money is, this capital that's flowing in, it hasn't really moved the market yet, letting you know that, hey, there may be movement here happening in the future, and that starts to become things that gets added to an actual watch list. And then finally, we'll wrap up the members only portion with scanning for unusual volume in which we're combining our overbought and oversold confirmation signals. This is the edge signal, specifically to try and find opportunities around trend pullbacks. Now this here, you'll see how very easily you will be able to combine two different scans using information you already have. Should take less than a few minutes, but how that unlocks this whole new series of trade opportunities just by a few simple clicks. All right, so I think the scan should be useful. Let's start off with the first scan as part of this video, in which we're going to be building a daily time frame scan for 4 standard deviation plus opportunities. Let's head on over to ThinkOrSwim to get started. Let's get started by diving into the ThinkOrSwim platform, and we're going to start by reviewing one of the built-in indicators, the relative volume standard deviation indicator, and then we'll also contrast that with the average volume indicator, just so we can see which is more effective, more useful before we start building our scans. So if I come into the studies menu up here, we'll start by searching for relative volume, and that should give you the standard deviation. We'll load this into our charts. I can also get rid of all of our existing studies here. And then the other one that we're searching for is volume average. So if we search for volume average, that should then give us our two studies that we'd like to contrast. So here we have our volume average set to 50 days. So let's go ahead and match that with our length on our standard deviation as well. Now if we click OK, you have your two separate volume charts here. Now what should stand out right off the bat is there's fewer bars on the relative volume standard deviation study compared to the volume average study, which the way I perceive that is fewer bars means less information. Less information usually means we can start to filter out some of the false signals a little bit better. So that's why for the purposes of this, we're going to be focusing on using the relative volume standard deviation. But before we make that judgment call, if you notice, we have all of our above average volume where we still have the bars. We also have some of these smaller bars where we were above average volume, but you'll notice in terms of standard deviation, you were below 1 standard deviation on the actual volume when you compare it to the previous 60 bars, in this case, the previous 60 days, right? And so that's where I think this study will start to become a little bit more powerful, where we have these very quick hit spots that we're looking for where that gives us information. Now this is still set to the 2 standard deviation line. In the original scans that we laid out in that previous 4 scans listing, we said that we were looking for 4 standard deviation breakthroughs first. And this is what should be a lot fewer in terms of occurrences. But when we do see them, that's where we'd like to see fewer but more, I guess, useful or effective signals. So if I change this to 4 in the studies menu along with the numdev, we click OK here. We click apply, so we've gotten rid of the average. Now, the only bars that light up purple, which are the ones that meet our standard deviation criteria, are right up here on the S&P. And then the overall trend, all I'm trying to see is just if you had to zoom out, you don't need any magnifying glass, was volume a good predictor of price action to come with the way that you had price action behaving on the day that you had volume, or the overall trend, right? So in this case, for example, we had bullish volume along with a bullish candle, and price continued to again grind up higher in terms of the S&P. Once the breakthrough started happening, we also saw larger volume spikes. Now in both of these scenarios, I think it paints a very perfect picture, which isn't necessarily accurate. So let's just keep looking at a few other charts to get a feel, but I'd like to start with the indices and then we'll move on to some stocks. So if we contrast this with, say, the S&P futures chart, the S&P futures chart gives us slightly different information. The S&P futures chart gave us 4 standard deviation volume with the sell-off on June 11th, which so far we haven't really seen any activity off of that in terms of that panning out for a bigger flush move down lower. So I think that's interesting. I think this is also hiding or it does include extended hours volume, excuse me. So that does include that. So that's something interesting. If we contrast this with something like the NASDAQ, we don't see anything on the NASDAQ, but if we bring in the Qs had a good amount of selling activity. We had multiple 4 standard deviation plus selling signals, if you will, during the chunk in the February to March decline. So that's interesting as well. So now all I'm trying to do right now is gather information and not make any assumptions around which way I think the signals are going to fire. Now, if we also come down to, say, some other charts, so let's use something like Livongo. That's been on a tear recently. Our first spike was a move down lower here, where we had a higher volume spike, 4 standard deviation plus volume, but we actually had Livongo close, so this day would have predicted bearish activity. We were then supported with bullish activity here, so volume on its own, we're finding, isn't giving us any sort of indication, as in 4 standard deviation volume, but with the day in which we have our close less than the open, that's not giving us any signals on their own. But if we do have volume supported with the overall trend, I think that's starting to give you some sort of idea that would be a little bit better. And then you're also seeing some of these more obvious plays where at this point you already know that there's a good amount of volume when you have 4 standard deviation volume, when you also have a gap up higher of what was that? Close to, if we take our close to the open, close to 12.88%. Doesn't really take a genius to figure out that you have a lot of volume this day, right? But what I think you should be able to pick up from this is you're able to spot volume opportunities much quicker, right? You know exactly you have 1, 2, 3 bars on the daily chart that gave you just unusual volume activity if 4 is the threshold you're looking for. And if you'd like to trim that down a little bit, reduce that threshold, make it something like, say, 3, you can come in, update this to 3, click apply, and we'll now suddenly see where we now have volume that's suggesting greater than 3 standard deviation. So now you should start to notice how this as its first layer, we'll build this as a scan. That's not as powerful as if you can start to layer on additional signals, additional triggers, things that we've already built as well. You can start to layer on things like the simple breakout in a scan format where you can then use the two combined to start to give you moves in which you have a simple breakout that is confirmed with volume, in which you have both a directional bias along with the volume bias. And that's where I think that starts to become a little bit more interesting. So let's start now that we have a good idea of this relative volume standard deviation by first understanding the two plots that we have here. We have the relative vol plot, which is the actual volume bar, and then we have the standard deviation line, which is nothing more than just a horizontal line. So when we scan for our 4 standard deviation volume burst, we're going to be using rel vol. This is the plot that we're going to use as an output of this study to try and then find or check where that is either equal to or greater than the values that we're looking for. So the first one is 4. So I'm going to come in, I'm going to copy the title here just so it's easier to copy paste. And I'll come to our scan tab and we can close out anything we currently have here. And we'll start by loading in our first filter. So I'll click add filter, study. Note the study scan filter system only works with real money. You can't use custom scans with paper money, so just keep that in mind. So now if we click study here, we'll scroll down, we'll click custom, we click ThinkScript editor, and here we can go ahead and start by pasting in the study name. Now that on its own will give us an error. So our first thing that we said we wanted to do was scan for areas in which we have greater than 4 standard deviation plus volume. So let's start by writing a script for that. We'll say plot signal. So this is what we're scanning for. Our relative volume standard deviation built-in study. To reference that, we also need to use the parentheses to essentially say that this is a function we're referencing. Then we'll say period. And now we'd like to reference one of the plots, right? And so we said we wanted to reference the rel vol plot, which you should notice that that also starts to automatically give you the auto suggestion, which if you click enter, that auto fills this, and we'll close this out with our greater than or equal to 4 condition, and we'll have our semicolon. Now that's it. That built our scan, the first scan that we were looking for, which is give me places where we have a greater than 4 standard deviation volume bar today off of our daily chart. We'll click OK here. Now our other two conditions are based off of the actual stock, where we have more than 500,000 volume and more than $10, which really this should be changed to something like 20 if we're looking for decent liquidity. And let's go ahead and click scan. Now we have 7 results here, so actually not a whole lot of results, but these are the places where on Friday we had greater than 4 standard deviation volume compared to the previous. Actually, this isn't even the 50 days, this is the 60 days. So if we load in our conditions here that we had changed it to, so we come back to charts, we notice we have 50, 3, no. So we can add in the same conditions as parameters here into our parentheses. So we'll say 50, actually now we're looking for 4 standard deviations, and we don't need to put any of that. So we just need to put in 50 because we're already looking for the standard deviation here, and we don't ever reference the plot. So we just need the length, which is 50, and the no is not useful here either, which is why the other two parameters are ignored, and 50 is the first one. Anyways, enough rambling there. So we have added in our length, which is 50. We'll rerun the scan just to make sure we have the right length. All right, and this time we have 8 candidates instead of 7. And so if we start to filter this in terms of volume, and we start with our highest volume here, we have Netflix at the very top. So let's see if this is actually true. Did we see greater than 4 standard deviation volume on Netflix on Friday on the daily chart? And so if we come in, before we switch on over to Netflix for this grand reveal, we'll change this to 4. we'll click OK, we'll click OK. And now if we switch over to Netflix, we should see that the bar is above our standard deviation line, which it is, right? We see that on Friday's activity, we had greater than 4 standard deviation volume. We also had price move 8%, but you saw that that was on decent volume. It wasn't on light volume, all suggesting continued strength in Netflix. And so that should be a very easy way in which how we use the relative volume standard deviation scan to have 8 symbols that now off of, say, a daily time frame chart, you could start to review to see whether or not they meet any of your conditions around other trading rules that you may have in your own system based off of your written plan. So this is the first scan that we just finished building. It's where we're now scanning for relative volume where we have greater than 4 standard deviation plus moves. Now the second scan that we said that we wanted to build was to find areas in which we have greater than 3 standard deviation moves, but this time over multiple days, right? So we're now introducing in a second component here, which is of length of days in which you'd like to see the signal to be true. So if we click this edit button here, we'll come in. Let's go ahead and edit this. So now instead of changing this to a plot, we can make this a variable that we're looking to see, hey, is this true or not? So we'll say def, and we'll call this, let's say volume condition is equal to relative volume with our length of 50 still is greater than, this time we said 3 as our standard deviation mark that we'd like to see it above. And this time we'd like to see if this is true over multiple days. So to do so, we're going to leverage the sum function and see whether or not this condition, which would return 1 if true, 0 if false, if the sum of that over the past 5 days is, let's say, greater than or equal to 3, which would suggest that 3 out of 5 days we saw relative volume where we had volume greater than 3 standard deviations. So we'll say plot signal is equal to sum, and this time our sum, or the variable that we'd like to take a sum of, is our volume condition, the one that we defined right up here. We'd like to take a look at the sum of this over the past, we said 5 bars, and over the past 5 bars, we'd like to see if this is greater than or equal to, we said 3, right? And that's 3 for 3 days. So we can even add in some comments here. So we'll say something like scanning to see where we have greater than 3 standard deviation plus volume on 3 out of the past 5 days. And that's how I think you would define the scan in layman's terms. In fact, actually, if we move the comments to above the actual plot variable, and then we can also add in a comment above the volume condition, which is defining places in which we have greater than X standard deviation of volume. Right? And so this is how we have our second scan, in which now we're looking for places in which we have this volume condition, but over multiple days. And that days is just because we have our daily time frame here. But say you wanted to scroll this down to a 5-minute chart, you just come in, choose 5-minute, and you can either include or exclude extended hours. And that's how you can now start to use this exact scan for a variety of different trading, whether it's swing trading, day trading, whatever different kinds of setups you're looking at. So for this, let's switch on over to our daily again. We'll click OK. Let's rerun this scan. Now we see that we don't have any results here. So let's go ahead and expand this now. Instead of daily, we'll come into something like, say, the 1-hour time frame. Let's click scan. Let's see if we have anything to be true here. Again, Netflix. So now if we come into Netflix on our 1-hour time frame chart, we should notice that we have greater than, we said, 3 standard deviations. So if we load in 3 here instead of 4, we have over the past 5 bars, which is 1, 2, 3, 4, 5. We have 1, 2, and 3, all of which we have greater than 3 standard deviation volume, which is why this is appearing on our scans tab. And so like that, we'll notice that this now starts to give you this continuous feed of places where you have volume that's starting to happen down to the actual hourly time frame, the 15-minute time frame, or you could even set this to something like the 1-minute time frame, where now the standard deviation you're looking for is something like, say, 10, if you really wanted to find places where you have rapid buying that's happening at an exact moment or something of that sort. So that's how you can start to adapt the scan based off of your own trading style. But this then completes the second scan that we were looking to build, which now took into account multiple lengths in terms of multiple days or multiple 5-minute bars, whatever it is, as part of the scan conditions. All right, so now for our third scan, we said we wanted to try and do something similar, but this time in options. Now, keep in mind that with the options hacker here, if I do scroll to that, all of these studies are still linked to the underlying, not the actual options underlying. So it is a little restrictive there, but we're going to use similar volume conditions as we did in the stock hacker, but try and use some other basic liquidity filters and volume to try and find places where we have unusual volume activity happening down to the option strikes. Now, keep in mind, this is a little bit more of guesswork, or you're going to have to do some more deeper dives, if you will, to try and validate this idea. But let's get started so you at least get some sort of an idea in terms of what I mean, where you can find some of these specific strikes leveraging the underlying. So if we copy paste in all of the code that we've already written, we'll start this from scratch. So we come back to the options hacker here. I'm going to get rid of everything. And we'll start by just adding in our first basic study filter that we've already created here, where we said we wanted to see everywhere where we had our relative volume conditions in which we have this multiple burst of buying, right? So we click OK here. Let's go ahead and click scan. And what we should notice is we have our 7 stocks here. This time we've scanned in all optionable instead of all symbols. You can also change this to all symbols if you'd like. That's completely up to you. Now, before we run the scan again, let's add in some options filters as well. So if we click add filter, we click option. We'll start by adding open interest. So if I can find that, open interest. We like to see, let's say, open interest above at least, we'll say 3,000 contracts. So we don't really have to try and worry that much about liquidity and wide bid-ask spreads. We can also come in, we'll add in one more options filter here with volume. And we can start to say maybe your volume is 300, perhaps, maybe a tenth of the volume. This is all just, we're guess and check, right? Now we have our studies filter here. If we click scan, you'll notice that this trims down the list, but we still see the actual underlying here, Levi and Neo. Now let's say you wanted to see the actual options. So where we see stocks here in this dropdown, we can click this dropdown. We'll change this now to be options, and we would expect to see options in Levi and Neo that are liquid, that also have decent volume, which are now the strikes that you can go and try and look at based off of the unusual volume in the underlying, right? And so if we come down here, you'll notice that we have the July 10th. So these already expired. So let's look at the 17th, the July 17th, the 9 puts, the 10 puts, the 11 puts, the 9.5 puts, the 12 puts. You also have the last price. So these are all fairly inexpensive, but you can also start to scan for volume here. And so in this case, this volume that we see for, say, Neo, and this is end of day data, but now imagine if you're running this scan real time while the markets are live, this volume data is updating as you start to actually get these new orders coming in. And if you came down to the trade tab under, say, something like Neo, if we do come to Neo, you would also get to see the time and sales data in the options time and sales, where you can start to use that to look for unusual quantities, and that then starts to give you at least your first point of attack in terms of the scan. It tells you a notification that, hey, Neo has unusual volume that's been happening over whatever time period you're looking at. These are the option strikes, which already have good liquidity, and you can then come into the option time and sales data here and start to see, hey, did we see a good amount of new purchases in these already liquid options over the past whatever time period that you may be looking at. So that should then give you an idea of how you can start to use the scan for the underlying, layer on basic options filtering conditions here, and to give you some other ideas as well. You can take this one step further, so you can start to, say, take out volume or maybe open interest if maybe you don't necessarily care about that, but perhaps you'd like to see something around the actual delta. You'd like to see where you have a good amount of volume with at the money strikes, right? So you may say something like you have open interest of, say, 3,000, while your delta of that option is something like, say, maybe you might be looking at 40 to 60. If we did take a look at that, that gives you actually a very small range. So we'll say 0.4, maybe it's, yep, 0.4 to 0.60. And that then gives you a very narrow range now, which you can add to your existing filters to try and find some of these options that you generally would just like to trade. So you're not scanning the entire chain, but you may, say, only be looking to trade at the money options. They might be the cheapest. They might work the best with your trading strategy or styles, but now you'd also like to layer on unusual volume in the underlying, along with some basic option Greeks to try and very quickly find places where you'd like to go focus. So this is the third scan that we're building, which brings in option strikes, unusual volume activity, all into our options hacker, and how you can use this drop down here, change it from stocks to options to try and find very specific strikes that you can then start to go look at for more attention. And something specific here that you may also be looking at is instead of weeklies, where you start to see unusual activity around this volume, but happening in leaps, right? And so when I say leaps, this is where you're instead of 2020, you're coming out to 2021 options. Who's buying a good amount of that? And you can start to look for things like that just by scanning up and down this list, and that becomes a very easy way of doing your research, at least in terms of a daily research that you may do, say, afternoon, or whenever that happens in terms of your trading strategy. One quick way to try and also filter for leaps, for example, if you did want to try and add that in as a condition, is we could say add in another filter, which is options here. We'll say days to expiration. That's another drop down you have. And you may say that, hey, the minimum days to expiration that I'm looking for is 360 or even 365 if you wanted a full year. And that then again helps you narrow down the scan. You can start to tweak this volume condition down to something like, say, the 1 hour chart to try and find more and more opportunities. See if you do have any setup. Now for our last scan, we said we wanted to bring in moving averages. So we're going to come back to the stock hacker here. I'm going to remove all of this code actually, so we'll just rewrite this from scratch. But we're going to start off by first defining the SMAs or the moving averages that we'd like to take a look at. So for the purposes of this video, we said we wanted to take a look at the 50 period simple along with the 200 period simple. So let's go ahead and start by first defining these. So we'll say def SMA 50 is equal to simple moving average close 50. We can copy this, paste it one more time for the 200 day. We'll say 200 here. We'll come into SMA 50. We'll change this to 200. And now we have our two moving averages defined. We now need to start to define a way to essentially combine the relationships between these two. And so I think in our scan, if I look back at the wording, we said unusual volume occurring with price around the 50-day simple moving average and above the 200-day simple moving average. So one way that we could define that is by using the cross above. If when you say price around, you mean cross above. So that would look something like this. So we'd say def SMA condition is equal to close crosses above SMA 50 and and closes above the 200 period simple moving average. So that would be one way to interpret that statement. Another way is where you could start to build this into a percentage term using something like the absolute value, where you say something like absolute value, and you might use the relationship between the close and SMA 50, and then you're going to take that and divide that by the actual close, and that would give you a percentage, which you can start to say is, less than or equal to, maybe you want it to be within 2%, whatever you may like it to be. That's another way that you could essentially interpret this statement of prices around it. So I'm giving you several different options here. And then the last way that I think is at least one interesting way to do it is to keep things super simple and just say, hey, where are we above both the 50 and the 200 period simple moving average, where our volume is showing us that we have volume which is greater than usual, specifically greater than 3 standard deviation. Now we'd like to combine all this into one plot signal condition. So we'll say plot signal is equal to SMA condition and volume condition. So we'll combine both of those. And that should then essentially let the scan compile successfully. We'll click OK here. Now if we run this scan, all right, so with these results here, what you should notice is a few similar results. We have Netflix that keeps appearing over and over, but let's try and switch it up. So let's look at something like, say, PHI, where we see that the stock was actually down, but it still passed all of these scan filters, and we're still seeing it come through. So let's take a look to see if that should be coming as we expected. So we had PHI here. So, yep, PHI has been on a tear. We're above the 50. We're above the 200. We had a huge spike in volume. In fact, this was above even the 5 standard deviation mark. And that was on Friday's activity. This time it was sell side where you had volume in terms of profit taking. But what should also stand out here is the trade that you're looking at is on a bullish light, right? And so ideally, the scenarios in which I think that we're looking for and that we're going to try and craft, at least to be able to find in the volatility box tutorial portion of this, is where we had spikes like this, large volume spikes. Then we had price really just chop sideways, and that volume spike was really that precursor to this large movement up higher, and we're trying to find these volume spikes, which is what I'm calling the hidden gems. So here would be one example of that hidden gem, quote unquote. It's where we see that volume spike, then we see stock is really just trading sideways, and then we're looking for this burst move up higher. All right, so I hope all of these 4 scans and this slightly longer tutorial helps to give you an idea of how you can take some very simple built-in indicators into ThinkOrSwim and very quickly using 3-4 lines of code, maybe tops, turn them into some powerful scans, which are giving you opportunities opportunities where instead of having to go look for each trade setup, instead of having to take your favorite trade setup and then go look and see whether or not these rules are being met, you can build a scan which automatically does the heavy lifting for you. You can truly harness the power of ThinkOrSwim, and you can have it alert you to all of these trades that are setting up. Now, the last piece that I told you that I would show you in this video was around how to create alerts where they're sent directly to your phone based off of each scan result. So here, if we save this scan, any one of these scans that we've saved, so we'll call this unusual volume around 50 and 200 SMA. We'll click save. I probably have one called it, so I'll call it V1. Now, if I come into my watch list column on the left-hand side here, if you don't already have it, you can use this plus button to add in a watch list. But if we close this, now let's go ahead and load in the actual watch list here. So I think we call it unusual volume. We see that in the P section in the U. So I have unusual volume. Now, if I hover over this, you'll see that there's an option where you can click alert when scan results change. So if you click this button, that then gives you a pop-up notification where anytime a symbol is added to this watch list, to the scan criteria, which means anytime any one of these signals ends up becoming true, you will get a notification. And if you set this to also notify you with both sound and mobile, you'll get a push notification if you have the ThinkOrSwim app downloaded, which then essentially starts to work as alerts coming directly to your phone, even if you're not always in front of the screens, anytime any interesting condition that you care about is met. All right, so hope this video helped. If you did enjoy learning more about scans, I urge you to take a look at the volatility box component of this. That's the Unusual Volume Pro, where we're going to build 4 additional scans, trying to essentially find some of those opportunities, those hidden gems, where instead of giving you scan results that you have to then go filter through, you have a list of smaller stocks where you can actually start to act on some of these trades, and there's logic driving behind each of these signals where you have more than one reason that you're looking to essentially get long or short depending on the setup. Hope this episode of How to ThinkScript was useful. I know scans have been something that a lot of folks have been wondering about, curious about, and this should hopefully help to start give you some ideas at least on how to build scans. Take care, good luck trading, and we'll see you in the next How to ThinkScript tutorial update.